All right. Hello, everyone, and welcome. This is the 182nd Governance and Risk meeting here at MakerDAO. My name is Peyton. I go by Pros11 online, and I'm one of the governance facilitators here. I'm joined by a bunch of awesome Maker people, people interested in the protocol, and yeah, we're here to give a weekly update, discuss some of the things that are going on in governance, some of the risks that the protocol is facing, and answer any questions or concerns by the audience here joining us today. As you might have noticed, the meeting is being recorded, so let's try not to talk over one another. If you do have questions, though, feel free to either utilize the raised hand feature in Zoom, so I know I should call on you. You can also drop things in the chat. More than happy to read them out if you're unable or otherwise unwilling to hop on the mic. That should pretty much do it for ground rules. We do have a bit of an agenda to get through today. As usual, we'll start out with the governance roundup, go over the votes, maker improvement proposals, and general goings on in the forum. Then we do have a couple of initiative updates, including the off-chain collateral management, February financials, and a resilience initiative. That resilience initiative should be pretty closely related to budget management, spend growth, and all that good stuff we have listed under discussions. So hopefully things will just kind of flow naturally from one to the other. After getting through all that, if we still have time, there will be open discussions. So if there are topics you don't see here that you'd like to have covered, feel free to drop it in the chat and we'll try to work it in during this meeting. And if not, maybe save it for a future date. Awesome, that's enough pre-spiel rambling. Let's get into it. So pretty light week as far as governance stuff concerns. We did have two on-chain polls, both of them passed. The first was the proposal to fund the ambassadors program pilot. And the second was the rapid amendment to MIP 64 to clarify the critical web bounty amount. So both of these have passed on the ambassadors program. We'll need a few details in terms of like where to send the funds. So once we get that, we'll work that into the executive. And on the amendment, though, that should just be taken care of by our MIP editors. We do have 9 ongoing ratification polls. Those will be covered in our next segment, so pay attention there as those are up for vote for another week and a half. Excellent. You might have seen on the forum, there is no executive proposal this week. We didn't have anything major to send in, so we decided to take advantage of the time and give the PE guys a week off. Last week's proposal did pass and execute, though. That contained the Curve Stake ETH pool onboarding, which is live and has been at least utilized by one person out there that I saw this morning. We have the rate limited flapper. That's the mechanism that essentially stops or sets a limit rather on the amount of flap auctions that can occur at one time. And then we sent out the bug bounties for Immunify. Cool. I tripped over myself enough while going through that, so I'll gladly pass over the mic here. Today we actually have Sevix giving us the MIPS update.
Thanks, Peyton. Hi, everyone. Glad to be back. Sevix here this week with the MIPS general updates. So, as of last Monday, all 9 ratification polls are live. So let's take a quick peek into what's going on regarding votes. Oops. So next slide, please. Before the ratification polls, we have a vote that closed yesterday, as Peyton mentioned. An amendment that entered the weekly cycle was approved with over 90% of votes going for yes. This amends the MIP 64 bug bounty program run by IS001 to clarify the amount to be paid out for critical web bounties. And here's how the budget proposals are looking so far. We've got MIP 40 C3 SP61 for real world finance core unit DAI budget going with a no at the moment. And we have, oh, wait a minute, go. And we have both the DAI and MKR budget for Gov Alpha going with 100% rate of approval. Next, we have the core unit of boardings. Voting for MIP 41C5 SP5, facilitator of boarding of the MakerDAO shop, along with the whole core unit, is currently leading with a no. Just as a reminder, this core unit has no budget. Therefore, only this one proposal was deemed required to board the entire core unit at the moment until the core unit offboarding process is revised. Then we have amendments. MIP 4C2 SP17 amends the MIP 64 with an expedited process for a small bug bounty payout. This will also entail an addition to their budget, and currently is going with 100% yes, with 34,000 MKR bought so far. We have 2 Keeper network onboardings for Keeper and Gelato. Results, we've got both onboardings going with 100% yes as of today. And the last vote, we have the declaration of intent to invest in short-term bonds, MIP 13C3 SP12, which currently has almost 100% rate of approval. All of these ratification polls will run until March 28th. So if you haven't voted, please vote. And we go to the proposals in RFC, which are pretty much the same as last week. First, we have MIPs. For MIPs, we have MIP 65, Project Clydesdale, which I understand is going to be seeing some revisions soon. MIP 66 from Pairwise that intends to integrate Pairwise with MakerDAO to provide fixed rate daily loans. We also have MIP 67 that intends to formalize the methodology to evaluate structured financial transactions made under the MIP 6 application process. And finally, we have the MIP 68, which is a self-contained collateral onboarding MIP that will onboard and activate a real-world asset vault backed by the assets of a trust arranged by Monetalis. Then we have the core unit budgets for governance communications, data insights, strategic happiness, and protocol engineering, which are already being discussed on the forum. We have 2 GovCon budgets because the first one could be a bit controversial and the core unit doesn't want to run out of budget. So both proposals are running in parallel. Assuming 62 passes, it will be carried out, unless 63 also passes, in which case only the latter will be carried out. There is one core unit onboarding MIP set for the events core unit, whose mandate is to provide high-level MakerDAO branded event experience to the crypto and maker community. Then we have amendments. For amendments, we have the MIP 4C2 SP15 amends the core unit offboarding process. We have then another MIP 4C2, a MIP 7 amend that adds a description for CES as a collateral onboarding domain team. And we have the MIP 4C3 amendment for MIP 62, the collateral offboarding process MIP that describes how vault users will be notified of offboardings. This amendment removes the offboarded of content production core unit from it. Last but not least, we have 2 mandate revisions, one for governance communications and one for data insights, MIPs 39C2 SP30 and 31. We have a SPF to allocate 50,000 DAI for the MakerDAO event in Amsterdam, the onboarding of CES as one of the collateral domain teams, a modification for the collateral application form that amends to contain more relevant questions that allow core unit and MakerDAO community to be better informed by applications that use it. And recently posted by pros, we have the MIP 47C3 SP1, the solution of content production multi-sig requests and proposals to remove content production wallet from the recognized multi-sig list. And just a small mention, this one won't be entering April's cycle. And I think that's it. Remember, ratification polls will run until March 28th, and authors of proposals eligible for April cycle, keep in mind that March 30 is the last day for modification. So I think that's all. I'm sorry, I'm a bit nervous. It's been a while since I've been here. So thanks for having me.
Thank you for presenting, Zavix. That was awesome. And thanks to or MIP or Pablo for the simultaneous posts. That was really cool. Awesome. That should take us to our forum updates, and I have Artem ready to go on that.
Yeah, hey, yeah. The MIPS update makes me want to step up with our link updates on the chat. But I am posting the forum at a glance, and welcome. This forum recap is going to cover March 10th to the 16th. And let's begin with our top announcements for the week. Starting off, Growth Core Unit introduced both their internal and DAO calendars for posting content in the MakerDAO Twitter account. The internal calendar consists of Growth's production line of content with the objective to raise awareness and inform the audience on what's going on in MakerDAO. The internal calendar consists of discussions, community updates, core unit updates, and announcements. The second calendar, the DAO calendar, is used for core units to communicate their own updates by using a framework that allows to request and schedule tweets. The post includes a visual step-by-step guide on how to request a tweet on the MakerDAO Twitter account. Also, don't forget to pick your communications representative for the DAO calendar and provide Growth the representative's email. Next up, we have SES presenting their ecosystem performance API and dashboard to help promote a more efficient allocation of resources across MakerDAO's workforce, work, and capital. The focus of this dashboard is to increase transparency by comparing delivered work and output across timeframes, increase accountability by making this dashboard and providing the relevant data, and reduced information cost by collating SES initiatives into one location that's easy to access. The performance dashboard will be designed using an API-first approach, followed by the designing of the UI as the second step. The post also includes how SES addressed the need and strategy for this dashboard, which includes stakeholder research interviews and data model designing. Also, make sure to check it out as it offers a comprehensive breakdown of everything that I mentioned above, as well as their next steps going forward. And next up, the Lending Oversight Core Unit, LOVE, published their overview and incubation update. LOVE aims to support the vision for onboarding complex assets that have real use cases beyond just trading and exchange purposes by helping to professionalize checks and balances within Maker, along with aiding to financially mature the wider ecosystem. LOVE Core Unit believes it's time to plan on reaching a 100 billion DAI mark by improving a more sustainable and decentralized framework to onboard complex collateral through engagement with high quality borrowers, protecting assets against bad credit loss and events, and promote community education and greater financial sophistication within the DAO. There are multiple teams and members that are involved with LOVE's mission, such as Will from Real World Finance, Christian from Real World Asset Legal, Robert from Collateral Engineering, and more. The post includes a short roadmap as well and phases throughout the next year up to 2023 and throughout 2023. Additionally, LOVE and Real World Finance introduced their weekly office hours, taking place on Wednesday at 1700 UTC. And a quick announcement, as Peyton already mentioned, there's no executive tomorrow, March 18th, because of not much on the backlog and none of the polls require immediate action. Everything will be bundled into the next week's executive. And moving on to our top discussions. This post was initially put under announcements for the forum at a glance, but after some more reading and thought, I decided to throw it under the discussion section since it does promote further discussion. Nonetheless, the Growth Core Unit, along with, well, not the Growth Core Unit, but Hexanot Nadia and the people involved with posting this strategy, submitted their plan for an aggressive growth strategy through a two-step process. Firstly, by turning off the MKR burn and instead focusing on building a massive system surplus towards at least half the amount of the current DAI supply, which would allow us to accept relatively greater protocol risk and take on more profitable opportunities, such as, for example, issuing a fixed rate financial instrument, such as a debt through an insurance fund. And step two involves us getting our risk on. Lately, we have been relatively risk averse, and much of our real world asset progress is slowed by legal barriers. However, there shouldn't be the single factor that completely disables the onboarding of a real-world asset. We should discuss about conservatively increasing our risk towards greater experimentation of real-world assets, and with a much higher surplus buffer, we may be able to do this. The post also speaks about improving our networking and business strategy with lending protocols, where they can offer us expertise in risk assessment in exchange for cheap credit, essentially being a win-win scenario. The idea is that Maker should focus on being a competitive and innovative credit wholesaler rather than assessing individual loans. Check out the post for additional ideas and discussions that are in the thread, and Growth will be releasing a more detailed post soon containing a concrete plan of action.
And just for the recording, not half the DAI supply, but like significantly more than the current stability surplus buffer.
Oh, must have misunderstood when I read, because I was like, that's a lot, but. All right, so next up, Monet Supply introduces a proposal for staking MKR and potentially revising its tokenomics in the hope of improving user growth, governance participation, governance security, and to help supplement the existing buyback value accrual system. The proposed mechanism aims to preserve gas and tax efficiency of the existing buy and burn mechanism while also addressing its drawbacks. The new token is meant to also replace MKR as the core governance token. Staked MKR will be non-transferable with the purpose to represent MKR staked in governance. Users can stake MKR in governance to receive the staked MKR token, which can also be freely delegated. Initial example parameters are provided in the post, and the proposal is open to the public for further discussion. If you want a more comprehensive breakdown of the tokenomics, check out the post. And next up, as summarized in the most recent weekly relay, there has been increased concern and discussion around improving core unit budget modifications. As the number of core unit continues to expand and new core units in incubation, existing core units strive for growth and scaling themselves. However, growth and scaling is usually accompanied by a request for budget increases. And recently, there's been a community-wide assertion that our workforce spendings may become unsustainable, potentially leaving the protocol in a precarious situation if our revenues cannot keep up. Recognized delegate Dunam calls for improving core unit budget examination and awareness, as well as Makerman, also a recognized delegate, who voices his opinion to revise the current budget request MIP 40. However, there are members from SES and Strategic Finance who have been working together to help improve and implement a standardized budget process for core units. But it's not all just gloom. A number of core units and delegates do agree with these opinions and are willing to help streamline the process and help improve the future budget modification process. And moving on to our active signal requests, we have 3 active signals at the moment, starting with Patrick from Gov Alpha, who signals to push MIP 62 amendments on chain, which contain minor changes that reflect the offboarding of content production. And next up, GFX Labs introduces notional finance, an Ethereum protocol that facilitates fixed term crypto asset lending and borrowing, and is signaling whether to onboard a D3M for Notional Finance's 3-month maturity DAI lending pool with an initial debt ceiling of 10 million. And finally, Strategic Finance signals to onboard PaxG as a collateral type, which already has risk assessments and was previously approved for onboarding in October of 2020. Sebastian also states that PaxG market cap and liquidity have significantly improved as of recently. And that's it. Check out the forum at a glance for some more announcements, discussions, initiatives, and other fun things.
Awesome. Thanks, Artem. That'll bring us straight to our initiative updates. All right, first we have the off-chain collateral management status update. I believe David's kicking that off.
Yes, hey everybody, how's it going? My name is David. I'm the facilitator of the Governance Communications Core Unit, and we have been playing a role in the stakeholder alignment process for various initiatives at Maker, one of which is the off-chain collateral management. initiative. And so I'm here to provide a bit of an update, and I am going to have some help from the various groups that are involved, which include real world finance, risk, our team GovComs, collateral engineering service, sustainable ecosystem scaling, and growth. And to some other degree, the engineering teams like StarkNet, PE, but I digress. So there is a total 7 milestones. I'm gonna do a very kind of quick run through of where we're at with everything. So the first milestone has been broken up into basically per deal sub milestones. So the milestone is to lead the existing deals that we have through the due diligence pipeline that real world finance affects. And basically our target dates here were for end of Q2. And the last time I brought this update to the call, the team was focusing mainly on Monetalis, SocGen, and 6S. Monetalis and 6S, the assessments have been delivered and the ball is in their court. And so the status of that is delivered from the real world finance side. And SocGen, I believe, is still in progress. And so I want to hand it off to I believe, Will, to Christian to really briefly talk through what it actually means to bring one of these partners through the due diligence pipeline, because I think it's important to educate stakeholders on this call, just, what is involved in this process.
Oh, yeah, thanks, David. So this is Christian. Yeah, so on the SocGen transaction specifically, in terms of what has to happen, I think there are 2 parts that are happening now, which is the technical due diligence. So the CES team is ensuring that the token that SocGen has in place actually works and how it works within the Maker Vault. And in the SocGen case, we're actually still working through that issue. There were some technical differences between what SocGen had put together and kind of the standard Maker token, and Monkey Irish can speak more, or Nikolai can speak more to that. But in terms of the contracting itself, there's basically 3 agreements. And we have been going back and forth with SocGen on 2 of the 3. Their counsel has been preparing the agreement, so the speed at which documents get prepared is really being driven by SocGen. And it involves really negotiating, not so much negotiating with them as making sure that the agreement really reflects the transaction that has been outlined and agreed with SocGen, making sure that some of the legal issues that pop up based on the structure that we're seeing are adequately addressed. There is an issue. It's not so much an issue anymore. There was an issue that we were looking into as to French law and the creation of the pledge, and the SocGen's holding the keys to its token and what that meant for transferability of the underlying asset in the event that there was a liquidation. So, we're just kind of working through those issues with them, with external counsel, to make sure that when we put the risk assessment together, we fully understand the various nuances, both of the token itself and how that token interplays with the underlying agreements. So that's on SocGen. David, I don't know if you want me to go through kind of the one through the pre-MIP work.
Yeah, you don't have to go through everything in detail. Yeah. Just to save time.
Sure.
My goal is really for you to be able to convey so that kind of process that you described with SocGen really applies to every single one of these at various levels. There's a technical and a legal assessment that has to happen, and basically, yeah, it's kind of like a volleyball match of going back and forth.
Yeah, and to a higher level, with respect to every single one of these transactions, each asset's going to be different. Some will be tokenized, some will be not tokenized, some will be partially tokenized, some will have centrifuge. They all bring kind of a different set of issues. The applicant is coming from a different jurisdiction, so we're having to address issues of where we as Maker, or how we integrate with the real world. It's no longer a Delaware statutory trust situation when you're dealing with the transaction. It's in a jurisdiction outside of the US. And that involves then a number of other issues that need to be considered both by the applicant and ourselves. So that's actually probably one of the biggest issues I deal with, is just that DeFi real world integration piece. And each one of these transactions has that.
Yeah.
And if I can add just 1 minute, David, Christian,
Sure.
Luca here. We are de facto, we are doing a lot of heavy lifting that in the medium term we would expect the counterparties to do themselves, right? To come with an application that is as ready as possible. We were on a call with Christian and Monkey Irish yesterday on this. Obviously, our intention while we are onboarding, because we want to do business in the most prudent way possible, we're also pushing counterparties to productize and standardize as much as possible their package on a technological and legal side, so that they will come with a set of characteristics that are meeting minimum requirements on our side, so that we don't have to reinvent the wheel all the time. This is the ambition, obviously, that we are having. So we're trying to work for the short term, because we know the community is, I wouldn't say impatient, but is eager to do business with real world borrowers, and also working for the long term in standardizing and productizing what these guys are doing. Because I mean, I'm stealing Christian's words from a call yesterday. I think we don't want to transform Maker in an old TradFi bank. We want to push borrowers to innovate on the technological side. So they are also innovating on the tech side, and everything is running smoother and better and safer than the way we are used to in the old world.
Yeah, thank you, Luca. All right, so in the interest of time, let's kind of fly through the rest. So milestone 2 is to graduate the 3 real-world asset-related core units from the SES incubation program, and I believe the intention is to take the existing real-world finance core unit and essentially split it into 3 that have their each have their own specific scope, and these are the LINC core unit, the lending incubator, the RWAL core unit, which is the legal and transaction services core unit, and then the LOVE core unit, LOVE, the lending oversight core unit. And so the combination of these core units effectively splits up the work that it takes to take an application from being submitted to being assessed to finally being integrated. And of course, other teams play a huge role in that, like CES. And so I'm not going to get into like the mega details of where each of these are. SES incubation program has a number of standard sort of steps for each core unit. And so the 3 of these are all in progress and are in varying stages of being put together. So yeah, if you're interested in more detail, just message the guys over at CS or message Luca, Christian, and Will. All right, milestone 3 is a revamp of the collateral onboarding pipeline for applicants. And for this one, I'm going to give it over to Monkey Irish just for a brief overview.
Thank you, David. Hey, everyone. I know the title of this might be a little bit different than what I'm going to suggest, because there are multiple core units involved in revamping the pipeline for applicants. But to give you a very quick update, this is the upcoming revisions to the collateral onboarding process. Part of the MIPs that I put into the RFC process is the basis for some upcoming actions. And one of them is to update both our on and off-chain greenlit collateral with an explanation of some additional guidance and parameters that we would like to see in order to ensure the growth and the health of any of the collateral that's been proposed as a MIP6, and give that publisher of the MIP6 an opportunity to come back and either respond to it, update their MIP6, or maybe even withdraw that. And so we're talking about some very basic parameters like how much DAI can be generated. Is there liquidity in the market for this particular instrument? So we're working with key stakeholders in the community to make sure the parameters, Nikolai is working on the parameters inside of the CES group to be able to make sure we have plenty of feedback from the core units before we go into the forums and post that. So we're talking in the April timeframe to do this, because it's going to generate a lot of activity and a bunch of chatter in the forums. So we just want to be very careful that we have the necessary core units lined up to be able to answer questions. And as part of that too, to tack on to something that I think Luca was talking about, is that I would also, another action is that to set expectations and clarity on what's possible today as it relates to the proposals that are being made for onboarding real world assets. And we do have tech today, and I just want to make sure that we're clear in the community that the mechanisms that we have available to us, there are some proposed mechanisms that we'd love to see in the future, but there's some work that needs to be done before we get there. So there are, again, realities and expectations that we just want to set to be able to let everyone know, if we do decide to onboard a piece of collateral, the process by which we would do that today. So I'm going to pause there because I know there's a lot more to come. If you have any questions, please reach out or type them in the chat.
Yeah, cool. Thank you, Robert. All right, moving on. For milestone 4 and 5, these are both very similar. One is to lead Maple Finance through an ongoing legal R&D project. Similarly, leading Centrifuge through an ongoing legal framework R&D project. Christian, do you want to say a couple words to this?
Yeah, on the Maple Finance one, we really have just gotten started. On Centrifuge, we've made a little more progress. I think Centrifuge has posted something recently, and we are now just kind of having discussions on the agreement, and just trying to make sure that the points that have been raised by the community over the past period of time with respect to Centrifuge and how we should improve the overall structure of their transaction are being addressed.
Yeah, cool. Thank you, Christian. For milestone 6, it's to publish an ALM, an asset liability management legal research report. Luca, do you want to speak very briefly to that, or even Christian, if you're into it?
Yeah, sure. Again, so on this one, it's really just, again, trying to find the first time way for us to remove bring on new assets to replace the USDC. And again, it's the real world DeFi touch point that is locked right now. And we're just looking for various keys to unlock that. And we're having discussions with various people. And actually, frankly, the more discussions we have with people, the better understanding we have of counterparties' issues. And I feel more confident that we're going to find that key, but it is, as Luca would say, the first time it's ever been done. So it's not something that you can necessarily rush into. And, we want to make sure that it's done right.
Yeah, cool. Thank you. And finally, milestone 7 is to update the existing greenlit off-chain MIP6 collateral applications with a status update, which Robert already alluded to. It's part of our milestone 3, which is to revamp the overall process. But yeah, milestone 7 really is to provide an answer to all the existing applications that are sort of waiting to hear back. All right, and so that is about it for the collateral management off-chain. And so if you have any suggestions on how we can improve our brevity or the level of depth you'd like us to cover for any of these, please let us know. And yeah, I'm going to hand it off to the strategic finance team. I believe it might be Mark or Ace who's doing this one. So yeah, be my guest. Can you grant me access to this?
Yes.
Should have checked this before.
While we're updating the technicals, just a reminder, if you have questions during the presentation, it's probably best to leave them in chat. Then when we get to a good spot to answer them, we'll circle back to it.
All right, here we are. I'm gonna have to go through them like this.
No worries, that works. Can you scroll down to the next slide? Thank you. And we're going to briefly cover the financials before talking through some of the cash burn analysis. So February, our protocol revenue decreased by about 75% from prior month, driven by nearly 100% reduction in liquidation income. Our net interest income was down 34% from prior month, and workforce and oil gas expenses were down 17% and 60% respectively. Note the workforce expenses reflected here are on-chain flows and may not be reflective of the actual cash burn. Please reference the expense reports that the strategic finance team has posted on the forums to find this information. Our recurring income was down 38%, and lending markets have continued to take a beating through mid-March. But we've started to see a few signs of life the past few days in collateral prices, so hopefully this trend continues. Next slide, please. Thank you. Here's a waterfall chart breaking out the month-over-month change in recurring net protocol income. So as we all know, risk-weighted assets have continued to unwind over the past several months, but yields have also been decreasing as well. So we've taken a significant hit to the bottom line. Despite lower workforce and Oracle expenses, they're not significant enough to offset the large decreases in both the change in assets and yield. Next slide, please. I'd like to briefly talk about the ETH lending market share on level 1. This chart shows the past 6 months of the ETH lending market denominated in ETH on level 1. So as you can see, we've essentially been in a bear market since October, down only. ETH, compared to last month, ETH lending markets contracted 6%, and we're down 14% from November, with Maker losing about 13% share from January and 15% share from November. We're starting to dig into these numbers to better understand where all this ETH is going, whether that's into staked ETH, as we've recently opened those vaults, and so has Aave for deposits, whether that's level 2s, or if users are just unwinding due to bearish crypto market conditions. And next, I'd like to introduce everyone to Adrian, also known as ADCV on the forums, who will be presenting some cash flow analysis and opening up a discussion around budgeting given the recent forum activity. Adrian recently joined the strategic finance team following stints as a CEO and turnaround manager and M&A investment banking at Goldman Sachs. Next slide, please.
Hi, everyone. Nice to meet you and eager to come on board. I don't know if you can hear me correctly, but shout if not. Yeah, look forward to getting a chance to meet everyone, and sorry to jump in with such a grim subject as MIP budgeting, and but you got to start somewhere. And I think here we just wanted to highlight the conversation that's been happening in some of the forum posts. There's been a lot of frustration, maybe with a lack of clarity in the way that we set the budgets, the processes that are involved. In particular, also the frequency with which they arise on the forum. So, you know, they tend to be quite sporadic. They try to fit the governance windows. But this can, you know, end up being overwhelming for maker holders and for delegates to evaluate in a diligent way. So as a result of all of this, we decided to do some back of the envelope simulations. And if you turn to the next slide, we wanted to show you some of our results and conclusions. So on this slide, we are basically showing a simplified P&L focusing only on the recurring items, excluding liquidation and trading. And what we've done along the right-hand side of the table is illustrate various simplistic scenarios ranging from bull to super bear, and the impact that this might have on the protocol cash flow. So basically, if we go top to bottom, we start with assets net portfolio yield, which brings us to revenue excluding liquidations and trading fees. And then you deduct core unit operating expenses and Oracle gas to get to recurring net protocol cash flow. We have two further lines below the yellow row to show what this would look like if we approved 100% of all of the proposed new core unit expenses. And then below that, our a hypothetical increase in core units expenses related to customer acquisition. So this is something that some of our competitors engage in, but Maker does not and may in the future. So for our scenarios, left to right, we picked out bull, break even, bear, and super bear. What these do is drive the size of the asset exposure relative to today. We're in any case assuming long-term yield compression as competition intensifies. So 2% net portfolio yield, we're assuming will decline across each of the various scenarios, and that there's no scenario where they will trend back up. And then simplistically, we're assuming that Oracle Gas scales with the size of the assets in the protocol, which may or may not be one-to-one true, but we tried to come up with a heuristic, and in any case is not actually one of the main cost drivers. So I'd like to focus on a few takeaways from this slide. Firstly, our operating environment is highly volatile, and any of these scenarios are actually perfectly likely. Our environment is still quite early in the adoption curve, and it's still in a stage where things move in fits and starts rather than sort of continuous pumping S-curve style growth. And then secondly, we also wanted to highlight the impact of ongoing operating expenses on the profitability and sustainability of the protocol. So here, the key message is that adding operating costs makes cash flow more sensitive to changes in revenue. And as Sebastian is noting, we're in a very startup fashion, we're excluding stock-based compensation. So all of the Maker expenses are not included in this table, but they would come on top as well. So there's two risks I think that we'd like people to take away from this slide in terms of the exposure that our protocol faces to two very different types of risk. The first one is being caught off guard with high operating expenses, yielding very little business results when conditions deteriorate. The second one is the opposite risk, which is being caught off guard with low investment in growth in an environment when the market is really pumping and then lagging behind our competitors and losing share. So we summarize these two risks as insolvency, which has actually happened once before to Maker, and bets are off in whether it will happen more than once again. And then the second one is the flippening, which is the risk of Maker being flipped by one of its competitors. It has an incumbent position, and this should be defended and invested against to protect. So with this context in mind, I think we wanted to loop back to some of the concerns that members of the community have raised regarding the way that we manage operating expense budgets for core units, bearing in mind that we want to be flexible enough to mitigate both of the risks, underspending and overspending. So on the next slide. So on the next slide, we wanted to go over some of the risks that we mentioned earlier, insolvency and flipping, and the problems that we face in terms of positioning the protocol to mitigate them. Namely, the first one is it appears that the budgeting process is quite broad and it lacks structure. So budgets can be proposed haphazardly at any time for any amount and without any consideration of overall DAO expenses or how the core unit may have performed in the past, or whether that specific activity is a crucial need for the protocol at that moment. And then once approved, core units have no formal expense reporting requirements, or at least not in a standardized way. And so the DAO has minimal visibility into how the funds are being spent, and there's no formal accountability. It's easier to onboard than to offboard, as we've seen with the shop example. So to resolve this, what we'd like to do is propose some budgeting principles that should aim to do two things. The first is to help core units remove cognitive overhead when it comes to managing reporting. So this is we want core units to focus on the business of core uniting and being a DAO and being Maker, and to minimize the amount of time spent on paperwork. And the second and more important one is to equip Maker holders and delegates with the best and most timely operating plans and financial information with which to make decisions. So of these principles, we've focused on four main ones. The first and most important one is that each core unit investment should help to drive new revenues and or should help to support the business effectively. And in the absence of overarching sort of DAO objectives or an executive team that can set this direction in a coherent way, an easy way of testing this principle for each investment is asking the question, are we adding at least the amount of revenue that the expenses are increasing by? And how does this investment support operational efficiency, growth, or user satisfaction? The second one is the use of dollar threshold or DAI thresholds to measure the impact of a change in budget. The third one is financial transparency. So a little is better than nothing and more is better than a little. And here we would like to encourage all of the core units to be as transparent as possible, as is already a part of the maker culture, as I've been able to see. And then finally is the flexibility to respond to changing macro environments. So these two key risks, they move in either direction. And I think the protocol and core units need to be prepared to react in an agile way to both scenarios. And so here we want core units to think in sort of 5, 10, 20% terms. What is the minimum that you need to get the job done? What would you need extra in case the market turns? How much can you scale back the expenses in the event of a super bear scenario, for example? So to summarize, the end state that we're aiming at are firstly DAO-wide organizational goals that support the strategic focus areas. That there's a general sense of overall motivation, but I think of overall motivation and overall direction, but I think it's, there are numerous conversations about how there's a general sort of lack of a on paper tablet strategy that everyone is driving towards in the same direction all the time. And this is maybe part of the challenge of being a DAO, but having these organizational goals in mind would be helpful. The second one, and in practical terms, something that we can help solve faster, is a budgeting process with a more robust MIP 40 with defined budgeting periods, and find a way to align them with these organizational goals, however they might be defined. Clear, transparent, standardized, and timely financial reporting. And then finally, a way to measure core unit performance and alignment with the mandate that they've been entrusted with by maker holders. So just to close out on this topic, I think in terms of next steps, in the strategic finance team, we're picking up this mantra of having a bias for action. So we're keen to do things rather than do less things in this sort of spirit of incrementality. And we wanted to take advantage of this GNR call for a broader discussion for preliminary ideas. And we would like to submit a first draft proposal next week for ongoing and further discussion. And of course, if in the meanwhile you have any thoughts or comments, we're always available on Discord to answer. So yeah, so much for, Will here is mentioning auditability. Who guards the guardians, even the auditor? These are all good points, and this is exactly the sort of discussion that we wanted to stimulate in this call. So thanks for your time again. Nice to meet you. Sorry I had to be in this with this serious set of slides, but I look forward to interacting with more of you in the future.
All right, next time we have you present, it'll be when maker numbers going up, so you can cover why that's happening.
Pleasure.
This is a tradition, though. When I first presented financials for Seb, this price was down quite a bit, if I remember correctly. But yeah, thank you, Adrian. And just to tie a bow on this, we know a lot of people, SES included, are working on these types of initiatives already, and there's definitely a lot of collaboration going on behind the scenes. And I think many also on this call attended the SES performance update, and that's in the pipeline too. So I think we're moving towards a better place in terms of transparency and accountability for the entire DAO, and definitely excited for that future. But yeah, we're trying to continually take one step at a time and keep getting better and better.
Well, appreciate the presentation there. I know we haven't had too much time for discussion. Hopefully we'll have a little bit at the end of this next one, but resilience does speak pretty well to some of the things we just spoke about. So I will go ahead and hand it straight over to Wouter, who I believe is doing the presentation.
Yeah, thank you, Peyton. And indeed, it's very related, basically building upon what AES and Adrian have presented. First, I want to set a little bit of context. So why we are starting with this strategic initiative. So if you want to go to the next slide. Of course, all the discussions and definitely the kind of budget flexibility that was mentioned is very much applicable to the SES activities. So we're on the onset of our season 2 of the incubation program. And with the changing market conditions, it's really difficult to plan. So for the entire trajectory, it's almost 9 months that you have to look into the future. And given that the crossroads that we're at, it could go really in all directions. So yeah, we need a little bit more strategy and structure around that in order to be able to fit everything in. I think Monkey Irish did the post on the forum, asking questions like, is MakerDAO a startup, or are we supposed to be an established organization? How are we funded, etc. There are the checks we want to put in place for expenses. On the other hand, there's the need for continued growth, and the question, what does sustainable growth look like? And in general, what will MakerDAO look like in a year? So these are all very relevant questions for the things that we're organizing. Our current approach is basically one of flexibility and resilience. So we're staying on course with what I call contingency add-ons, meaning that we're not canceling everything or something like that. That might be overreacting. Rather, we'll continue to work on the incubation program, but with support for example, what we call minimum viable operations. So this is very much in line with what was mentioned, thinking about, what is the minimal cost that you can carry to operate, remaining flexible in terms of scaling parameters. So we won't make any sweeping decisions about the number of facilitator candidates, for example, or the number of core units that would graduate no sooner than is absolutely needed, so that we maintain flexibility there. And we want to support a budget neutral scenario, which basically means that we have a scenario where the existing budget of the SES incubation program, which is completely separate from our permanent team budget, could carry over to the new independent core units even when they graduate, so that the total is a net zero, and so that we can do this without extra costs for the DAO. But these are SES specific concerns that are related to many more general concerns that have been living in the DAO. So if you go to the next slide. And these concerns are what we just talked about. So the operating expenses rather, and what sustainable or unsustainable growth looks like. This really amplifies the other need that has been expressed from the early days of the DAO, which is the lack of broader strategy and vision, which should be supported by the delegates. So this has been a challenge from the very start of the DAO, and now when we're at these crossroads, it becomes extra important, because if you think about things like evaluating a budget, approving or rejecting a budget, this is very, very dependent on the strategy and the vision. The same core unit with a budget might make sense in one scenario, where it may make no sense in another scenario, totally dependent on which direction you want to go in. These are a set of, or a part of a set of broader alignment challenges in the DAO. And as was also mentioned, the typical challenges of core unit transparency and accountability are also things that we're still working on. More recently, there have been a lot of questions about the role and responsibility of delegates as well. And then the point was often brought up that the governance lacks really efficient evaluation and feedback tools. So there's a number of projects already going on to improve these things, but looking at the whole set and trying to connect them to the bigger picture, we believe that there is an opportunity here to improve our coordination mechanisms. So if you go to the next slide, please. So we already have a number of structures in place. Of course, we have our MIPs, 39, 40, and 41 that define the core unit framework. We have our strategic initiatives now as another element to coordinate around and to bring structure to the DAO. These strategic initiatives, they contain the roadmaps and OKRs that are so important to make reporting on deliverables possible. And we hope that one day all this will roll up into broader strategy and vision, which is or should be worked out by together with the delegates. So what we want to do, if you go to the next slide, is to add this new strategic initiative, which is the Resilience Improvement Strategic Initiative. And the goals are to improve MakerDAO's financial and operational resilience, what we were just talking about in the previous segment, making it more efficient and recession-proof. So making sure that we have a plan for all the different scenarios that were laid out, and that we know how our operations can scale up and down. We want to experiment also with core unit and delegates coordination towards emergent strategy and vision. So we believe that this additional challenge that we're put before is an opportunity here to explore how we can basically synthesize an emergent strategy and vision together with the delegates. So that should be a very interesting experiment to coordinate. And we the last point is that we want to ensure that short-term changes do fit within a longer-term strategy. So a lot of ideas have been brought up how we can improve the issues that we're facing. And we want to make sure that we bring them all together and that they fit into a broader strategy. And this would be, as Adrian mentioned, this would be with an iterative approach where we can combine quick action with longer term alignment. So the stakeholders for this initiative, contrary to the existing initiatives, it would not just include the relevant core unit representatives, but also delegates who are interested. So we'll be reaching out to the recognized delegates and ask them if and to which extent they would like to participate. And we will be acting as the initiative facilitator, at least initially, until the groundwork has been laid. So if you go to the next slide, please. To make things a little bit more concrete, so the kind of activities that we would work on, so we would have regular stakeholder alignment meetings, very much similar to the alignment meetings that we have for the other strategic initiatives. However, we would focus, like we would go through the entire process, going from the problem description to the solution. So this would be a bit wider than what we're typically used to, which is mostly coordination around building solutions. So we would first summarize ongoing concerns, problems, and risks, and try and make those as exact and concrete as possible. We would collect proposed solutions with their pros and cons, many of which have already been posted, I believe, on the forum. We have from discussion and conversations throughout a lot more. So then we would try and combine these solutions as a coherent roadmap within a coherent strategy. And because we're a decentralized organization, we'll leave the possibility open that there might be not a single strategy, but actually competing strategies. So this is something that will be very interesting to explore and see how we can deal with that. And then ultimately, we do want to, as I said, not just talk and have discussions, but also coordinate around roadmap execution to put these plans into reality. Our working documents that we'll be working with is the stakeholder alignment presentation. This is a document that has that brief overview of the problem description, proposed solutions, and then the strategy or strategies that we would derive from that. And then a very practical roadmap with milestones and deliverables, which can then again be used to track progress and yeah, see where we're going. If you go to the next slide. Yeah, this is the last point, I believe. So we want to keep things as transparent as possible. And I believe there is no reason here to actually limit transparency in any way. So we already have a Discord channel similar to the other initiatives, which is called the Resilient Stakeholder Alignment channel. And we'll be asking that that be made available for all MakerDAO members so that there's full transparency about the discussions we're having. The coordination calls will be open for anyone who wants to join, and they'll also be recorded for people who can't join due to time zone incompatibility, for example. And then, as any other initiative, we'll bring these regular status updates to the GNR calls. And no doubt for this one, we'll need forum discussions to to engage with the community and find the alignment on the different issues that will be discussed. And I believe that's it for the presentation. There we go.
Thanks, Vader. Great. So those three things that we just presented, I'm sorry that did take a little bit of a time, but they are pretty interdependently related. So we think we will have kind of an open discussion about the topics we just covered and general future and finance related thoughts for MakerDAO. Guess it might be logical to ask if there are questions or any clarifications needed from any of the presentations.
I guess one question I have is what's the timeline on a redesign of the MIP 40, which guides the core unit budget proposal process? It's my understanding that strategic finance is going to lead that revision. Is that right?
Yeah, we're working on a revision that we plan to post by the end of next week.
Right on. Thanks.
So going back to the finance presentation, I don't know if Mark or Adrian would be ideal to answer this, but you mentioned kind of in the broader lending markets, there's been this pullback, right? It's not just at MakerDAO. I was wondering if we could spend a few moments going over kind of the potential causes or reasons why we might be seeing that.
Yeah, I think broadly, a lot of it's just due to the broader crypto market going down, the bearish trends, right? Because if you look back at the price on most crypto assets, it's down from Q4 2021, and most recently, obviously, the conflicts in Ukraine. Markets have been even more skittish, and I think people are being more conservative in their investment decisions. So, to the extent that people are leveraging assets through Maker, they may be taking a more conservative approach. I think there's also some fundamental changes in the market that we're starting to see. With L2s starting to pick up in side chains, as well as staked ETH is a big trend, right? And you're seeing, tons of staked ETH flow into Maker, and I think that trend's likely to continue, right? Especially after the merge, and staking becomes continues to proliferate to a much higher degree. We've started to see a little price relief the past few days, but I'm not ready to call that a trend yet. But perhaps things might turn around. One thing we're looking at specifically is kind of like segmenting the customers based on their debt size. And what's actually kind of counterintuitive that we've seen so far is that the largest vaults have brought down their exposure more relative to the smaller vaults. I'm talking about like 10 million plus size vaults. So we're trying to do some on-chain analysis and understand exactly where the ETH is flowing. so we can get to the bottom of it. But we're just in the initial stages of that research.
Awesome. Appreciate the answer there.
Hey, Mark. Sorry. Hey, do you want to follow
all
up?
good. No, all good.
Oh, okay. Hey, it's Frank Cruz, 3F delegate here. I have a question for Mark. With regards to how you manage the balance sheet, how you present it to the community, I was wondering, how do you account for the vesting budget? Also, DAI that's locked up in the auditor's wallet. How are you presenting that DAI that's sitting vesting or in auditor's wallet? How does that look into the whole outlook and the maker burn that you just presented a few minutes ago? The runway burn.
Yeah, so we're not really considering the cash balance that each core unit has. We're looking at like the draw from any of those auditor wallets into those core unit operational wallets, right? So, one thing we're kind of looking at is, the actual burn, like money flowing out of those operational wallets relative to the budgets that have been approved. As you've probably seen, we're underspending those budgets by quite a significant amount, but like we need to have clarity and confidence into like how that cash flow is going to increase, right? So that's kind of why we started to do these off-chain, on-chain reconciliations, since we're not going through like a formal accrual process, right? So there is a buffer that's measured in like our actual balance sheet. We have basically surplus buffer plus the cash balance that's in those other wallets, right? That's not in the Maker protocol itself, right? So if you look at the surplus buffer on like Maker burn, that's not including those other balances, but in our financial statements it does track those balances.
So sorry, I muted myself there. So I know you want to get to Du's question, but real quickly, how does a subsidiary, say someone like KKR or JP Morgan, who has maybe like 100 different subsidiaries, report their earnings when, say JP Morgan Vision Fund number 2 is sitting on 200 million in cash? Just trying to get an idea how subsidiaries are reporting these to the public markets.
Generally, subsidiaries will consolidate into the parent company, but it depends how much of the subsidiary the parent company owns. So like sometimes there's like equity investments, right? So if it's greater than 50% ownership, it's going to consolidate like the pro rata financials from that subsidiary. But if it's less than that, it might just account for it as an equity investment on their balance sheet and in their equity.
Got it. So I guess we're not looking at core units as subsidiaries at all, right?
Right. Yeah. I'm assuming that funds in these auditor wallets are still technically controlled by the DAO and the protocol.
Got it. Thanks, man. Appreciate it.
No problem. And I think Adrian's going to answer Du's question in the chat.
Awesome.
I think on the question of making sure that budget reviews won't be taken personally, one thing that we've noted on the conversation in the forums is how heated and emotional it can sometimes get. And our diagnosis of this is precisely the absence of a structured, objective way of framing the budget proposal in the first place that leads to this. Whenever things are implied, it becomes a lot harder to evaluate objectively, or even write objectively. So our aim with the MIP 40, with the revised MIP 40, is to bring this clarity, and like we mentioned earlier, removing this cognitive overhead for the person who's submitting the budget, so that they know, so that they don't have to think twice about how to write it in the first place, but so they can ask themselves the question, is this driving revenue, and is this supporting the business in an effective way? And secondly, for the maker holder and for the delegate to be able to evaluate it in as clean, an objective, and unpersonal way as possible. I hope that answers your question, and I think this definitely speaks to this concern of taking things personally, because they shouldn't be, right?
Awesome, appreciate that, Adrian. All right, thanks for the patience, MakerMan. I appreciate you raising your hand and taking it away.
Hey, no problem. Thanks, everybody. In my post, one of the things I brought up was this idea of segregating operational expenses, or critical operations even from growth, right? Every organization I've ever been in has a distinct segregation on that, and they do a status update, right? Am I a growth company? Do I have money? Can I grow? Or am I in operations mode, just trying to get to a place where I can get some revenue so I can do something new? So the point is that the budget is ultimately the centralizing constraint for an organization. And it's a thing that we're going to have to deal with. And this brought up, somebody else brought this up, and I brought it up before, is this idea, if you're going to be, you're going to have autonomous people who are going to, and autonomous CUs that are going to coordinate to do something, then you might want to think about making it so that they can actually derive revenue, to be subunit businesses that actually can get revenue from other places, so that then you can they can be autonomous in some way, and that their budget requirements from a particular player can be mitigated to some extent, right? And so I don't see anybody really talking about that, although we've kind of started that process here. So I think that discussion will continue. And so one thing I was thinking about was, this would be for strategic finance, is kind of to undertake a review. We've got a whole bunch of MIPs, including MIP6s we've done, and to review all of those to determine which ones led, which ones led to revenue and what did they cost, right? Because a whole bunch of these just got deadpan zero, right? And then there's a whole bunch of other ones that actually led to revenue. And if we take a look at that, we can probably get a handle for what MIPs and what things we want to focus on that are going to lead to revenue, and what things are pretty much a waste of time for the DAO, at least to get a first shot at that. And so these are the kind of few things that I'm looking at, as well as figuring out how do we really do coordination around funding as well as initiatives, because I see a lot of CUs that are doing their own initiatives, and that's great, but then they have to come back and be coordinated on. And so we need a process to tighten that up. And so that's kind of all I have here. I'm gonna let it go back.
Thanks, Makerman.
Yeah, I'm personally quite eager to see performance evaluation and KPI and ROI type of stuff introduced in the DAO and evolved. I think going back to this whole iteration and trying to move forward quickly, because little is better than nothing, and more is better than little, right? And I think we're at the point where we have 20 core units, I think over 100 contributors, that we can start putting together some of these activities, right, and get the ball rolling. There's a ton of priorities for the DAO as a whole, and a lot of things that need to be worked on. But given the structure, I think having accountability is important, right? Because there's a lot of trust that's going out to contributors, and we need to make sure that maker holders and their interests are being reflected and taken into account, right? So we're also in a position now where markets have been bearish and cash flow has been declining. So some tough decisions may need to be made, and if we don't have any process in place to help facilitate those decision making, it's going to be quite messy.
Cool. Take it away, Tim. Oh, never mind. Okay. Well, if you change your mind, feel free to hop back in. Mark, stole your thunder.
I mean, I'll just chime in, but it would just sound like echoing. The main thing is I really like the idea of not only tying everything to P&L, because I think that'll sort of give us this granular focus that will be tied more to market sentiment. And to Wouter's point on the forum, I think we need to have room to take bets and experiments on things. If we don't iterate towards the future we want, then what's the point? My main contribution, I would say, is to let core units that may not be able to tie back to profits start to think of how their initiatives are driving value and think more holistically. That's about it.
Yeah, that's actually something that my core unit, governance communications, struggles with a lot to defend, because we don't directly drive revenues, but our impact is more on the stakeholder user experience side of things. So not just how things get tracked at MakerDAO, not just how core units work together on various initiatives, but also how external stakeholders like just investors can have access to the happenings of MakerDAO. Like, what kind of reports are we putting out? Where do we put them out? And so it's very indirect. Like, we don't drive revenue, but we find ourselves, we believe ourselves to be very impactful for the day-to-day business operations. And so, yeah, we set KPIs for the team as a whole, for our individual team members, and even for our individual programs. But it's something that is not as easily quantifiably tracked. We seem to see it more as a qualitative thing. But yeah, this is something that we're certainly thinking about.
Yeah, just to add really quick on David's point. Overall, yeah, true. There are very negligible ways to get a little bit of revenue through publications, but it's not going to be much. I looked into it, but something I've been looking into.
Awesome. I see Vector with his hand raised.
Yes, I wanted to add to what Tim was saying. It's especially difficult to make calls about budgets and the usefulness of a particular core unit if they are not directly driving revenue, because if they are, it's kind of an easy decision. Like you get more by voting them in immediately. If it's a supporting thing or something that is valuable in another way, then you really need a strategy and a vision in order to fit that in. And that's really where the core units that are cost leaders in certain strategies and certain visions may make a lot of sense. In other visions or strategies may not make a lot of sense. So that's what we hope to help with the new strategic initiative, is to figure out that connection, to at least formulate that emergent strategy and vision that we talked about, and then make it possible to base decisions on that, right? Because without that, like it's not enough to only have numbers and ROIs. Some things are long term. Some things are indeed just, they make sense logically because you're following a certain strategy and a vision. Yeah, we need to be able to express those things as well.
Excellent. I'm noting the time here. We have about 5 minutes till we normally end the call. So if you do have any last comments or questions, that would be a good time to speak up.
Yeah, just to put some closing thoughts on this ROI versus non-ROI, support versus revenue generating core units. I think one thing that's not talked about enough that Brian brought up in the chat is the perspective of the vault users, which really, the customers of the protocol, the people that are driving the revenue, the cash flow, everything, right? Like, I think there needs to be a lot more focus on that perspective, like just purely like a product perspective, and getting like growth from those customers. So like, I don't know, sometimes we spend a lot of time talking about other things that can add value, don't add value, cost money, don't cost money. Like one thing that like is really important, like does Amazon invest in supply chain because it makes them money? It doesn't directly make the money, but their supply chain has become a moat, how efficient they are, shipping out packages all over the world. And why? Because faster shipping, customers love free and fast shipping, right? It's just amazing for the customer. So if we do things, make investments that make the customer user experience better, like that's going to create a lot of value, whether that's not someone, from growth finding an institutional client, like it's just, I think naturally people being drawn to the protocol because it's just a superior product than what's on the market. So I think we need to have a big focus in that area. I'm not sure exactly, what metrics we can use to track that at this time, but something, I'd like us to think more about.
Yeah, and so it's a good example that you gave, the decision to build that moat and to take that bet, because when you start building it, it's not sure that it will work, right? So you can calculate the hypothetical ROI, but then still, there are many things that Maker could do that might in the future be profitable, but obviously we don't want to do all those things. So which things do you want to do and which things do you not want to do? That's where you need strategy and vision to determine what is in scope and what isn't. And yeah, I think that very well illustrates the problem.
Awesome, and appreciate all the points in chat. It would be too hard to highlight all of them, but thanks everyone for staying engaged. Seeing a lot of comments like we should try this or we should do this, and probably a good time to just remind it is a DAO. So if there's something you see that you think would be beneficial, you can do it, and encourage you to take ownership and post things transparently and engage with the whole community. Yeah. Appreciate everyone on the call. Wrapping up here, so one last call for comments and questions.
I think another thing that we haven't touched on in this whole conversation is that Hexanaut and that group that posted their strategy for aggressive growth touched upon is a capital raise that they're proposing Maker should consider. And so I know typically people think that the only way Maker can raise capital is by selling MKR or by increasing revenues. But Sam Hexanaut makes an excellent point in his post that we could actually do so with debt. And not only can we do so with debt, but there is more innovative mechanisms that we could build into a capital raise. For example, raising debt from customers. Or raising capital from customers like vault users and DAI users and giving them special sort of privilege in that process. But yeah, so beyond just having capital as a result of revenues, I think stakeholders should consider this idea of a capital raise.
All right, we seem to kind of be naturally winding down. Not sure if that's due to the time or people running out of things to say, but I appreciate the conversation, and special thanks to everyone who presented today. As usual, we'll be back same place, same time next week. And yeah, thank you everyone for joining.